Mic check 1 2. How's it going, everybody? This is Market Forensics, brought to you by AskBid, episode 6. And you know who I am. I'm Don Wick, Big God, aka Mr. Wall Street. Today, this episode here is a special one for me. This one clears up a lot of the mysticism. It clears up a lot of the misconceptions and deception that is rampant within the retail trading community. I hear all too often traders talking about SMC, smart money concepts, and there's a huge infrastructure gap as it pertains to smart money and dumb money. It's actually funny. There was a movie that came out last summer, and went over dumb money, the GameStop theory, but a lot of people don't understand PFOF, right? Payment for order flow, and the role that CFD played, as well as the hedge funds within that whole GameStop short squeeze, or even what a short squeeze is. But the key understanding is that smart money doesn't work on dumb money. So in this presentation, we're going to go in depth as to really what smart money is and what dumb money is. All right. And why the two paths don't intersect. And there's a huge infrastructure gap. Let me talk straight with you. You ever tried playing chess on a checkerboard? That's you trying to run smart money setups on a MetaTrader 4 terminal. You're trying to play Wall Street games on a dollar store PlayStation. Yeah, they got servers, but there's latency routing. Exchange fields don't get filled and aren't real. You got fake candles and a rigged roulette wheel. It's not price action, it's price fiction. So let me give you the breakdown. Smart money strategies require institutional conditions, true institutional order flow and volume and exchange pricing. MT4 or MT5 or your broker's proprietary terminal doesn't give you that. You're looking at a cartoon version of the market, a mirage, if you will. And in this episode, we're going to go deep. All right. I want to talk to the trader in you. Okay. The critical mismatch. Again, let me give you another analogy. You ever bring a knife to a gunfight? Again, that's what you're doing when you're trying to run smart money concepts with retail brokers, right? The difference, the biggest difference is real traders, they'll use Bloomberg terminals. They're cooking with real-time order flow, and it's real liquidity, actual confirmation. So therefore, I can really look at liquidity sweeps. I can really see liquidity gaps because the level 2 data isn't stripped away from the platform. But what do retail traders get? What does the MT4 terminal give you? It's fast food finance. Yeah. And we're talking McDonald's. Now, synthetic price quotes, no receipts for the hidden fees, zero nutrition. You're making uneducated guesses, not orders, but uneducated guesses. And this is why it's often called dumb money. So ask yourself, you ever tried to apply institutional logic in a simulated sandbox? See, you have to ask yourself, why do smart money concepts fail with the retail broker? A lot of traders may have found that they have a spurt of success followed by successive losses, not realizing the game's been rigged. They told you to watch liquidity grabs and order blocks and supply and demand and fair value gaps. Yeah, but ain't shit fair about the value. Here's the punchline. You're trading in a box, a sandbox. These concepts, they're built for real exchanges, not dealer booths, not bucket shops. So you're looking for actual footprints in a place where nobody actually walks. There are no big steppers. So you will not find the market's footprint on an MT4 terminal with your fake volume and fake liquidity and the currency list on the left side of the chart. So in layman's, if smart money is about watching how real banks move and following the institutional momentum and order flow, why would you think it works when there are no banks in your market? When there are no institutions with that offshore shady broker? Order blocks, liquidity grabs and breaker blocks and supply and demand and support and resistance, and they throw in a Fibonacci and a pivot point and they sound very intelligent. Yeah, cute names, but they belong to coloring books, not charts. We're talking MT4, retail trading, or even trading on your broker's proprietary platform. And I don't mean Ninja Trader. I don't mean interactive brokers, or even your Thinkorswim from Charles Schwab, right? You can map institutional setups on these platforms because they give you the data. Charles Schwab may not have level 2 data anymore since they took over Thinkorswim, but for the most part, in the real flow of the market, you can see the bank's footprints. You can map institutional setups, but on MetaTrader 4, you can't even map your way to the grocery store. You can't map institutional setups on data that was never real to begin with. There's no tape, just broker-generated tricks in their sandbox, not a market. So why don't order blocks work on retail platforms? Because retail platforms don't have institutional data or order flow. Why do liquidity gaps appear where they should on a Bloomberg terminal, but then they're at a place on the MetaTrader 4? Because they're not going to show you real liquidity pools on an MT4 or a MetaTrader anything. I don't care if it was a MetaTrader 6. Why don't your supply and demand zones confirm where the imbalance between buyers and sellers are at a specific level? Because they don't execute on real exchanges. So you're not going to get the actual order book data with ask and bid truth. Now, smart money concepts, they do work, but you're going to need to have a true institutional infrastructure to play in for them to actually have any work their weight in gold. I mean, I can trade a supply level and have it work a couple of times, but for the most part, if the broker can tilt the odds in their favor, then we have to ask ourselves, who are we really playing against? What game are we really playing? So smart money, it runs on the market. It runs on real money, where the real money is traded. S&P 500, when you're trading the real S&P, is the most liquid instrument in the world. It has the most volume out of all instruments in the world. You think SPX 500 on your offshore retail broker gives you that same access, the same open interest? If we truly understand how the markets work, we can understand that if I'm dealing with an offshore broker in a centralized exchange that doesn't route my orders, then how can I know if this demand level really has institutional order flow, or if it's even really a demand level to begin with? All too often, I'll see a true SPX chart versus SPX 500. And going down to a smaller time frame where you're really trying to arbitrage and speculate, you can't really find an edge. And when you do have an edge, they're playing with the candlesticks. Liquidity routing? Nah. How about routing to their bucket? If I'm truly routed against the ask, when I'm on the bid, I can see what's truly on the ask, and vice versa. If I want to ask off the ask or bid off the bid with limit orders, I can do that as well. I have the option to do it because I've got all the execution tools at my fingertips. You ever try to put a market order on Cash App when buying stock? Or even better yet, a bracket order with an OCO, order cancels order, on Robinhood. I can tell you Robinhood robs from the hood. None of them have tick-by-tick execution tape. None of them have time in cells. They also will never give you a timestamp for when the trade was filled. Therefore, they'll never keep it real. So I want you to think about that. Digest that for a second. Without the timestamp, how do I really know where price was at the time I was filled and then check other brokers' price quotes to keep my broker honest? This is where the retail trading bucket shops will take out their timestamps. Or if you're ill-informed, they just give you something that isn't the underlying. They just give you something that happens to be a derivative, a CFD, where they're the counterparty. So what does the broker take away? I want you to think about it for a second. I showed you on a couple of other episodes where you see level 2 data, and all too often I hear retail, they get this little like confused face when we say level 2, because most of the time they don't know what level 2 data is because they've never even had any encounters with it. They never even saw a need for it. And even if you try to use the fake level 2 data within MetaTrader, you notice that it's ineffective. It's not consistent. So a lot of people abandon these techniques. But when you're in a market where there's a clearinghouse, orders are routed, I can actually check the exchange. I can check other brokers to make sure the broker is competitive. I can look at the spread. I can make sure that price actually moved down to 100 instead of it stopping on other platforms at, let's say, 102, but it went all the way down to 100 just to stop you out by the hairs of your chinny chin chin. Smart money's out here reading tapes, scanning depth of market, and routing through liquidity like ghosts through walls. You're blindfolded, handcuffed, and forced to guess with the broker behind the curtain pulling the levers. There's no tape. There's no volume, no clearing, nothing. Just smoke and mirrors and maybe a little hocus pocus magic tricks to take your stop loss out. And that's what we call true stop hunting. If I can't see a liquidity pool or liquidity sweeps or dark pools, the dark pools are everything. If I can't see this stuff, then I'm literally shooting blind in the dark. I mean, all too often, we see traders coming in and they'll post these snapshots, and even worse than MetaTrader, they're on TradingView. The TradingView charts are delayed. They're delayed 15 minutes, and here you are on a 15-minute. Shame on you. Even worse on a 5-minute with a chart with a 15-minute delay. Get the fuck out of here. You're 15 minutes late. Trying to trade on a chart that's giving you candles every 5 minutes. So being aware of smart money helps you understand what dumb money does, what dumb money is, and then make sure that you truly put yourself on the side of smart money. I took a trade earlier today. I bought S&P. It was XSP. I bought it at 666. I don't really like to buy it at that number, materialistic number. I prefer 777, but we're not at 777. Would have preferred 665, but price was at 666. So I took the trade. Point of the matter is, it was at a level where there was a lot of buyers. There was a significant amount on the bid, but wasn't too many asks, wasn't too much offers. When I can see in the order book that the bid significantly outweighs the offer by 3 times, You then get a market eclipse, not a mirage, but an eclipse. It's a rare event where the stars, sun, and moon align. And man, it's a lot better than just that trend line by itself. But if I can add trend line, I can add Fibonacci level, right? With maybe a 618 retracement and price below the VWAP in a sweet uptrend. Oh, I'll take it all day. But I needed the tape to be able to see that. I needed the tape to be able to go in and understand, okay, there were way more on the bid than on the ask. So if there aren't enough sellers at a certain level and there are more buyers than sellers, prices are going to have to rise to the level where there are sellers where they're able to transact. We found that at around 676 before price dropped down to around maybe 650-ish. But either way, the bulls came in a major way, especially on a Friday going into the weekend. I can see time and sales, even got a timestamp on the trade. These things are missing on the retail trader or on the retail terminal. Real exchanges, they have your order, right? There is no multiple. There is no guessing. They have real counterparties, which means there's oftentimes another trader. It could be a institution or a commercial entity on the other side of the trade. The exchange matching is automated. There is no cherry picking, and independent verification is done through a clearing firm. But the other side, it's broker-controlled simulation. Your counterparty is only the broker. So the very person that you've deposited your money with, whose platform you're using, and fake level 2 data, they're the one on the other side of the trade. It's back to the analogy where I said you're playing on someone else's home court with their refs and their inflated or deflated balls. So it's hidden arbitrary discretion and an edge tilted to the broker's advantage. And again, no clearing, only broker confirmation only. So it never was a fair fight. It's a pro versus placebo. Real markets got clearing, folks. True exchange matching and dozens of counterparties. And if not, you can penny your order, break your order down, adjust your bid so that you can get filled, or switch to a market order and not worrying about being slipped all the way to hell. You got one counterparty though in retail. It's your broker, and there's a monopoly on the money. Okay? You're not executing trades, you're just clicking buttons. And therefore, all they have to do to profit is just wait for you to click buy. Think, the real market, we think Wall Street, regulated exchanges and regulated products. A matching engine that clears you with someone else on the other side, not the broker. Retail, it's a dealer game. The table's rigged. They fake price and say thanks for the donation and don't give you an invoice. You're not getting a feel from another trader in that instance. You're playing against the broker, so they'll create the price at whatever benefits them. And on the smaller time frames, the distance between my entry and my stop loss is a lot shorter, making it easier for them to manipulate the spread and widening it, not because of a lack of liquidity, but widening it just to take an unfair advantage to have you stopped out of a trade. I see it all too often. So the SMC illusion. Every time you see that juicy fair value gap and think you're front running Goldman Sachs, guess what? The price level didn't even exist outside of your screen. I know that that's A shocking discovery, right? But hear me out. The broker invented it. You just map the GPS route to a mirage. The price levels that you're taught to watch, they don't reflect anything real. They're created by the broker's price server, and they can be manipulated at will. So this is where, when you start to show some momentum on the trade, you'll start to notice that things just all of a sudden go downhill. Because you think you're trading smart money setups, but you're just trading broker-generated bait. Those liquidity grabs, synthetic cap, that fair value gap, preloaded trap. That breaker block, a broker flicker, dressed up as institutional order flow. And you fell for it punchline and sinker. You're not trading institutions. You're trading illusions. And they're just laughing. They're laughing at you while they're laughing all the way to the bank. But with the market forensics, and you following along with me, make sure you like and subscribe. We're definitely going to be able to help you avoid some of these traps and become more of an aware, alert trader. So you have to ask yourself, is it real or is it a retail theater? There's no volume, no order interest, and no tape. There's no cake or no money to make. So that sexy setup you see with the fair value gap, it's a ghost, it's a mirage, it's a market trap. And what we call on the street, gap. Painted by the brokers just to trigger you to enter. Congratulations, you just got played by a screensaver. In this case, a screensaver. So why does it fail? It fails because it's designed to fail. Let me keep it 100. There is no real buyer on the other side of the trade. There's no exchange clearing the risk. No engine matching you. Therefore, it can be cheated. It can be manipulated to put you from A book to B book. Okay? If you get put in the B book, you're just trading against a counterparty who never had your best interests in mind. Your interests actually aren't aligned. Their profit model profits off of you losing. And the same goes for some of these prop shops that benefit off you losing and then going in and doing the retry again. So again, if there's no engine, no matching with the market, it's just a video game. But in this case, it has real consequences. Okay? With the broker, it's much like Vegas, online casino, and the house always wins unless you unplug the damn machine. So step up and step away from that MetaTrader 4 terminal and move to a NinjaTrader platform, right? I believe NinjaTrader is probably one of the best ones. They actually offer a free platform, but the fees are a little higher. You could pay a lifetime fee anywhere between like $1,300, $1,500 and it's lifetime. You get even cheaper pricing, okay? And the pricing is important when we're talking about trading in the futures markets. The fees can be significant for those with smaller accounts. So what are you saying? Okay, why do retail traders stay stuck in the abyss? First off, they don't know who's on the other side of the trade. A lot of times they're trying to trade with banks, not realizing they're not even trading with institutions at all. There's no institution on the board. Just you and that small prop shop, mom and pop broker. So the void, thinking you're trading against the market. You're not. Wake up, snap out of it. You're trading against someone who is out to take. On Wall Street, we don't make money, we take money. I'm taking money from somebody on the other side of my trade. So they figured it's a lot easier if they just go straight to retail. You think you got order execution? You think there's order execution? No. It's just a simulation. Mirage. Smart money doesn't work with dumb money. Smart money doesn't work on dumb money. Smart money concepts actually do work, but they don't work with dumb money tools and resources. So when you lose in a dumb money environment, the ones who set up that sandbox, they win. because it's the game they built. Therefore, the mirage is that candle, that price, that volume bar, all faker than the Lambos you see these influencers like Charlene standing in front of, and faker than the screenshots they're posting from their MetaTrader 4 trades. The trap, no clearing, no matching engine, no market. The judge and jury and executioner, you never stood a chance when the broker becomes all three. Until now, we break down all the lies, the deception, and bring some clarity. So you're reacting to prices you can't access. Step up, okay? Stand up for yourself and step away, okay? Let me teach you a phrase. Quote doesn't equal execution, all right? That's an order that you see that's delayed or not filled at all. It's supposed to get filled at $1.10 and 20 cents. You get filled at $1.10.35. That's not slippage. That's you slipping. They're robbing you at each mouse click. In your case, at the speed of a mouse click. And you're thanking them. Again, they know it's all about the dumb money because dumb money doesn't know what to look for. But after today, you guys are no longer considered dumb money. So how do you know when you're in an institutional playground versus the retail game board? I gave it to you here. Wall Street has a formula, okay? It's one track. There is no other track. Retail, you're racing bumper cars in a parking lot. You can't play smart money on dumb money rails. You need real execution, real flow, real accountability, or you'll be back here watching the next perfect setup evaporate on that screensaver of yours created by that broker. So if this hits you in the gut, then good. It means you're waking up. Trading should be hard, but it should be real. Okay? If your broker controls the rules, the feed, the feels, then you're damn right it's hard. Okay? You never had a chance to begin with. You brought a knife to a gunfight. You're playing checkers on a chessboard. So I always give you a gift. I'm going to give you guys a smart money reality check. This is it's a spreadsheet. It'll help you understand what you need, what kind of environment you need to be able to get out of the sandbox and really become smart money, follow smart money, and start trading smart money. I want you to download the Smart Reality Check PDF. You'll find the link down below. Like and subscribe. Join the community of alert traders. And stay tuned for Market Forensics Episode 7. We'll be dropping that tomorrow. You already know who it is. Mr. Wall Street, Big God, Don Wicks signing out of this bitch. Until next time.